Hey, what's up, everybody? Welcome to Forex Trading Analysis. Today is Sunday, April 22nd. Currently it is 9:24 p.m. And today we're going to be looking at a few pairs, but before we get started, quick risk disclaimer. So foreign exchange trading carries a high level of risk. Before you decide to trade foreign exchange, we encourage you to consider your investment objectives, your risk tolerance, and trading experience. It is possible to lose some or all of your initial investment, so don't invest money that you can't afford to lose. Seek advice from an independent financial or tax advisor, and all information provided is for educational purposes only and should not be construed as trading advice or counsel. So the first pair I want to take a look at this week is the US dollar Swiss franc, which, if you've been watching my videos, I've been taking a pretty bullish viewpoint on. I think that the dollar is in for a pretty large correction to the upside over the next couple of years, and the US dollar Swiss franc is going to be a pair I'll look at to trade to the upside. And I said that we would start to make a decision over the next couple of weeks about whether we were ready to make that strong push or whether this was going to be a move to the downside. And currently we did break below the 200-day moving average, so I'm never afraid to switch my bias if something like this changes. And currently, if just based on the fact that we are just below the 200 to 100, my bias for this pair will be to the downside. I think eventually we will push up, but it seems as if we aren't ready quite yet. So we have been closing below previous lows. This low is at 0.91114, and the close of this bar is 0.90885. So there's definitely a lot of selling going on in this pair, and it is a pair that usually will respect technical levels pretty well, and we are just below the 200-day moving average, so this is going to be a very big level for investors and people who are looking at this pair to hedge their bets. So we are just coming out of oversold territory, and we are pushing back to the upside. The RSI is currently at 44.58 and changing for the hourly charts. So we might have a little bit more to run to the upside. The closer we can get to the 100 and 200 moving average, the 100 right now is at 0.91478 and the 200 is 0.91574. So those are going to be great levels to define my risk at. One is at only like 39 pips away, the other is around 50. So pretty small and close levels there to define my risk. If we do start to close above that, like I said, I may start to switch my bias, because that'll also mean that we're above the 200-day moving average. So whatever happens tomorrow, if we do start to break back above this, I'll definitely be looking at that as a failed break, and a push to the upside is definitely going to be a possibility. But if not, I think that this move to the downside is going to continue from the pair. So however strong that is, we could see push back down to these levels at around 0.902, and possibly even a push down here to around 0.89426. So a couple different levels that I'll be looking at, and the Swiss franc is going to be a pair that I'll definitely be in and out of trades over the next few days. So I'll definitely keep up with this pair and see where it goes from here. The next pair I want to take a look at is the dollar yen, which my bias has been to the downside for a while. Obviously, just based on the fact that the yen is a pair that's extremely strong. We've had a downtrend if you look at the very highs from back in 2001. So placing a bet to the downside after a pullback to the upside isn't exactly a low probability play. So my bias for this pair will be to the downside until that changes, and I do believe that we may have finished this correction to the upside, and a push back down the 100 or 200-day moving averages is going to be a definite possibility over the next few months. If we do start to break below these levels on the daily charts, then my bias will be confirmed. Definitely, if we break below this today at 0.81309, that's going to be definitely going to be able to confirm my bias to the downside. And if we do start to close below the 100 and 200 hour moving averages, which are currently slipped to the upside, but if we do start to fail to move back up and we do continue this move down from the yen, then I think that the sell-off is going to be pretty big. And I'm noticing a couple things about the hourly charts is, first of all, that the RSI is getting into oversold territory at around 37.18. So if we do start to see another strong bar like this to the downside, we could see oversold conditions by midnight. So definitely I'll be watching that. I don't like to play short trades if the hourly chart is in oversold territory, so I will be looking for a possible pullback and a better entry point. My guess will be, if we do break below the 100-hour moving average, possibly find support at the 200, and move back up to the 100 is going to be a good entry point for me. So those are the two pairs I want to take a look at. We will glance at the news really quick just to see. G7 meetings are this week on Tuesday, and those are going to affect every single one of the pairs. Aussie dollars coming out with CPI tomorrow, and as well as PPI, which probably it might be out right now, but it will come out in the next couple minutes. So if you want to trade the Aussie, is also a pretty good pair to look at. I'm not going to look at the chart today, but possibly tomorrow after some good news out of the Aussie sector. So good news this week, especially for the dollar. We will definitely be having some good moves from the dollar this week. Wednesday is going to be pretty big, and we should see some good trading opportunities from these pairs as well as some of the other major pairs. So that's all I want to talk about today. Thank you very much for watching, and good luck trading this week. If you want to follow us at SynergyFX, we'll be posting updates throughout the week. Again, thank you very much for watching.